Read and what we can expect with Stan Chamu over at IG in Melbourne. Stan, thanks so much for your time. That confidence figure, is it likely to have much of an impact on the Australian dollar? It's just below that 105 mark right now.
Yeah, no, absolutely. Of course, we saw the Aussie dollar largely underpinned yesterday by that China data that just showed that inflation is still fairly under control. And at the same time, I think investors just feel the Chinese officials will keep the foot on the gas and ensure that they reach their growth targets for the year. Now, with the Aussie dollar, we managed to see a pretty good gain from around that 104 level all the way up to 1051, which is the high from US trade. It's since pulled back a little bit just below that 105 level. We last traded above that 105 level in January this year. And I think with the Westpac consumer sentiment figures due out today, they would have had a much bigger impact if it wasn't for the fact that we also have China trade balance numbers due out at midday today. I think they'll probably carry a little bit more weight for the Aussie dollar and how it trades today. I don't think a lot of investors will be too concerned with Westpac consumer confidence. We have seen confidence start to pick up a little bit, so it's likely to come in relatively in line with a bit of a slight improvement, really, but nothing too major out of the ordinary, unless it does come in negative territory with everyone. Maybe that might spook some investors, but for now I think everyone thinks things are starting to tick along just fine, particularly with the current interest rate settings and the RBA ready to pull the trigger should the need be. Then probably this will result in a little bit of stability in the Aussie dollar on that front. But we can't ignore the fact that some investors are looking at the Aussie dollar in a way that the Australian economy is one of the few AAA rated economies out there, of which Japan can invest in, and that's been one of the main reasons underpinning the Aussie dollar. So as much as it's trading as a risk asset, it's also seeing some safe haven interest due to that AAA rating status. We've probably got that China trade balance number, which is expected about 15.2 billion surplus, relatively steady from the previous reading of 15.3. That's probably going to be a game changer for the Asian session today. Of course, it was a fairly quiet night on the macroeconomic front with not much coming out. And should we continue to see some figures which support a rally for the Aussie dollar, I think a breakthrough that or a retest through that 105 level is probably the most likely outcome. Should we manage to break through there, then traders could look out for January highs in the 106 level. To the downside, we've got support in the 104 level, which is obviously the bottom end of that range between 104 and 105. So that's probably the most likely scenario for the Aussie dollar today, just looking out for those levels. Apart
Sorry,
from that,
what was the most likely out of those options, Stan?
We'll probably see a retest of the 105 level, which
Right.
was the highs from overnight trade. And should we manage to break through there, then that would push us probably to the 106 level, which is the highs from January this year.
Okay, Stan, thanks so much. Let's also talk about what's in store for the local market today. Can resources lead us higher again today after yesterday? Because we've somewhat digested that news out of China that materials on Wall Street were responding to overnight.
Yeah, absolutely. It's been all about commodities over the past 48 hours or so. They've really helped underpin the Aussie dollar, and in turn will probably underpin the local market at the open today. We're currently looking at a gain of about 0.1% to around that 49.82 mark. So there's nothing much in it. Of course, we had a pretty strong rally yesterday. So with no fresh developments from US trade, then there's nothing really to push us a bit further higher than that. But I think with oil, gold and iron ore all showing strong signs of improvement, then we can expect a strong start for the local resource names like BHP, which is pointing to, I think, about a 3% gain this morning. So that should be quite well supported. Rio also had a strong gain in London, so we should see this translate to a strong start locally. We've already seen a lot of brokers starting to come out and start upgrading these materials names again after what's been a long period of underperformance. So maybe this will start giving a bit more confidence to investors that the resources aren't done and dusted, and this was just a minor blip in their cycle. So even the likes of Fortescue, Iluka got upgrades from Deutsche Bank as well this morning. So there's a massive wave of upgrades from analysts coming through. I think a lot of them feel we'll start seeing a rotation out of the financials and possibly into some of these underperforming miners. We've got the likes of Sundance Resources, which had a massive drop yesterday. Of course, they terminated that agreement with Hanlong for that takeover, and their shares dropped to around 11 cents. So we might see some bargain hunters kick in today, but it's only for the brave. Of course, after such a big drop, it's always difficult to try and catch a falling knife. Of course, like you were mentioning before, we've got Billabong coming back on the wires. That will obviously be one of the main stocks to watch today. They'll probably open around that 60-cent mark, but a lot of analysts still feel it will trade below that. So we're eyeing at least a 17% drop for the stock today.
Okay, so you're eyeing 17% at the open for Billabong to the downside. Stan Shamu, we'll be watching out. Thanks so much.
Cheers, Kate.
Stan joining us live from IGN Melbourne there. Well, today the government will officially